Hey everyone, Patrick Jackson with Mann Mortgage here with this week's market update. Today is Wednesday, November 23rd. It's about 11:15 on the West Coast. Doing this day early because tomorrow's Thanksgiving and I don't want to bug you guys on Thanksgiving. So this week, things stayed pretty flat. Last week when we talked, the average conventional rate across the country was at 6.65. As of last time I checked today, it's at 6.65. So stability is never, a bad thing. Things are a little volatile as of today. We have the Fed minutes came out from their last meeting, and like we talked about before, they release these minutes and the markets kind of react. But it's all information we already know. They still support hikes. They're a little hesitant. Maybe they want to go down a little bit. So all should be pretty positive. The markets will probably digest the info and then settle down. And then we'll be closed on Thursday, and then the bond markets will be closed on Thursday, and then back up Friday. So we'll see, how things open up back on Friday. Besides that, this week we got new housing data or new home sales were actually up. They were expected to be down 5.8% for October, and they were up 7.5%. Which was interesting. Mortgage applications for both purchases and refis across the country are up the last 2 weeks. So that also correlates with, our drop when things were about, the 7.25 or so and down to the, 6.65. So, it seems like there was a little bit more activity, once borrowers saw things, get below that 7 mark. And so sometimes that's a mental thing. They don't like 7, but they'll do a 6. Besides that, we also got, one thing I want to share with you guys. I thought this was really important, and we've talked about this before. Unemployment numbers went up this week. And although that's not a positive thing for the workforce, that also is another indication maybe, we're in a recession. They're kind of in denial about it, but, our industry, we definitely think we already are. And I wanted to share this graph with you. So this is credit card usage over the last, it looks like 4 or 5 years. And you can see it was going up. It peaked during the pandemic. When people got stimulus money, that went way down. People had money to spend, kind of dropped down there going towards July 2021. And it's been on a steady climb since. And we're at a really high level. It's increased 15% over the last year, biggest jump since 2001. And, the Fed is saying, hey, retail sales are still great. People are still spending money. But this is how people are spending money. So this is an indication, another strong indication, even with higher rates, that we're heading into a recession. And again, keep in mind, we've talked about this before, when we are in a recession, rates get better. Another reason for, at least on the mortgage side of things, for us to feel optimistic that rates will come down, as you can see in all the different recessions that going back to 72, rates have dropped. Even in the pandemic related one, we went from 3.75 to 2.75. So not good for our workforce. Hopefully it's a very mild recession. But historically, when we do go in recession, mortgage rates come down, which is obviously helpful for everybody. And we get out of these 6s, and maybe we can get down into the 5s or maybe even high 4s again. So that's all I have for you guys today. It's a short week, as far as news data. Like I said, things have stayed pretty flat. Let's hope they stay that way or even come down more. I hope everybody has a wonderful Thanksgiving with their friends and family. If anybody needs anything at all, please do not hesitate to reach out. And I'll see you guys next week. Have a great day.